producers are listening. Bing Crosby is the voice of Christmas, in my personal opinion. Certainly for my generation, you go back half a century and you get Bing Crosby. That's beautiful, though, isn't it? That's Christmas music.
That's right.
Isn't that right, Tom Hayes?
I agree.
And you're going to support me on this, aren't you?
100%.
Lauren's not so sure.
No, I love it. I was just thinking these days kids like the pop Christmas music.
Yeah, well, these kids do, yeah. Am I a kid, he said?
No, you're a traditionalist.
That is true.
Vintage.
Nicely done, Lauren. Nicely done. And good morning, everyone. It's 10 o'clock. A little red for the Dow. It's off 40 points. Nasdaq's down 32. There's not that much price change on the downside thus far. Tom Hayes joins me. He's looking at the market for us. Everybody and his brother who comes on this program says, yeah, we're going to get a year-end rally. You saying the same thing?
Only
Yes.
the Fed could screw this up with
Really?
a 90% chance of a cut next week. If they surprise the market with a hold, that would be the only thing that could cause a year-end weakness. When the stock market is up 10% through October, on average, the December rally is not the normal 1.2%. It's 2% or greater. And that usually starts the 14th or 15th of the month, and it is usually dominated by small cap stocks. Small caps have the strongest period of outperformance from December 15th through March, so that's where you're going to get the biggest bang for your buck.
So I should invest in the Russell 2000?
Russell 2000, December 14th or 15th. Just get through that Fed meeting. Make sure they're on board. As long as they're on board, we're going to rally. We got earnings growth in the S&P. Quantitative tightening stopped in December. 316 cuts across global central banks this year. We are awash in liquidity. We just need that final piece next week.
Just watch out for the PCE inflation report tomorrow morning.
That's right.
That could upset the apple cart.
That's right.
It could.
Yep.
We shall see.
For sure.
But you don't think it will?
I don't think it will. I think for the Fed to back up after the market is expecting a 90% odds, that would be very, very risky for Powell. But he's done it before, December 2018. So until it's done, it's not done.
Until it's done, it's not done. I got it. Tom Hayes, you're all right. Thanks very much indeed. Still ahead. Thomas, what do you think of the Trump accounts?
I love them. There's something called the rule of 72. Okay, you take the rate of return, which on an index fund would be about 10% a year, divide 72, which means your money doubles every 7.2 years. So if you start with 1,000, by the time you're 18, you basically have 16,000. But if you get granddad, grandma to throw in a little bit, and you start with 10,000, you're starting college with 160,000. So the 1 grows to 2, grows to 4, grows to 8, etc. And if you hold that money till you're 40, exactly what JC was talking about, you wind up with a couple mil.
I shall try to remember that.
Yeah.
Tom, good stuff. Thank you very much indeed. On the markets, I see 24 points up for the Dow, virtually no change for the S&P and for the Nasdaq. Okay, Tom's got his special stock picks, and he leads off with Pfizer.
Yep. As we always say, Stu, when the downside is protected, the upside takes care of itself. This appears to be a boring stock, but they just did the Metsera deal, which is a once-a-month GLP, both that you can inject and will eventually become oral. They bought Seagen. They've got 4 new oncology drugs, but most importantly, they cut $7.2 billion in costs. Margins are increasing. Revenues are increasing. It's trading at 8 times forward, and you get a 7% dividend yield while you wait.
Okay, I like the 7% dividend.
This is a
that.
sleepy stock that's going to surprise people over the next couple of years and go up a lot more because healthcare is in the gutter and it's coming out like a phoenix from the ashes.
Okay. I'll take the 7% dividend. All right, okay. PayPal, you got 30 seconds to give me PayPal.
Okay. This reminds me of a company that we bought 2 years ago when no one wanted it, that was generating huge free cash flow. You couldn't give it away. It was called Alibaba. No one wanted to buy it. The thing took off. It's tripled off the bottom. PayPal is going to be a very similar situation, generating $6 to $7 billion a year of free cash flow. Alex Chris came from Intuit. He had a 38 bagger while he ran the small business unit at Intuit. Margins are increasing, revenues are reaccelerating. No one is paying attention.
That's more than 30 seconds.
And this is going to be a great stock over the next 2 years.
The hand is down. You're done.
Pound the table, confidence on that one.
Thanks. All right, let's see what we got now. Look at Meta. Tom, this is for you. Look at that. 4% gain for Meta. Tell me more.
You know, Charlie Munger once said, I'm all for artificial intelligence because natural intelligence is so rare. Here's an example with Meta. The stock is up. The market likes it. They're cutting their spend on the metaverse, which was a flop. They're investing in AI. The market likes it. The stock's going to continue to follow the theme.
All right, Tom, thank you. Thank you, Lauren. And thank you, Tom Hayes, for being with me for the hour. Appreciate that.